In this video, I want to show you one of the most powerful ICT concept. It is called SMT Divergence. You probably have heard about that, but you don't know how to literally use it for your technical analysis and how to use it for trade entry. So in this video, I will show you how I use it and how you can literally use it for your trade entry. So SMT Divergence simply means smart money technique. It is a way of identifying where the smart money are taking price and how they are manipulating price. So SMT divergence is simply a variation in the correlation of two assets that are positively correlated or negatively correlated. For you to use this SMT divergence, you need at least two assets that are either positively correlated or negatively correlated. One of the assets you will use as your benchmark for determining the movement of the price, and then the other asset you will use as your underlying assets. Once I go to my chart, I'm going to show you that and how to literally use it. So what we see right here on my table, we have asset A and asset B. You can see when we say positively correlated, it simply means that the assets are moving in the same direction. The performance are the same. So we have this movement from this green line, we have this asset, everything you are seeing until at this point where we have a break or a variation in the correlation. So in this kind of variation, we set to have SMT divergence. We are set to have smart money technique right here. It is just their own way of manipulating price, and until you know this, you'll not be able to identify where these guys are actually taking price or where they are manipulating price. So when we notice a sudden shift like this one in the correlation of two positively or negatively assets, we assume that that is smart money manipulation, reaching for either stop losses or where we see liquidity pool. I'm going to show you that when we go to the chart, how you can literally see it and identify it. Now, I have two assets right here in a typical example, GBP, USD, and then the DXY. The DXY is simply an indices that measures the performances of the United States dollar. And every time you see GBP, that is the Great Britain pound, and the USD, or any asset at all, whether you're trading crypto or you're trading any financial assets, as long as it is paired with the United States dollar or it has a relationship with the United States dollar, you can use SMT divergence for trade entry. So what we see right here is that we have GBP at the left hand side and the USD at the right hand side. So this is the chart performance you can see. As you can see right here, we have a higher high on GBP USD. We have a lower low on DXY because it is negatively correlated. So if we have a higher low, we should have a lower high. You can see the relationship. Everything this one is doing the negative side of it. So this is a negatively correlated assets, and this is the normal way that these assets should behave. But look at this particular one. We have a higher high here, we have a lower low here, we have a lower high here, we have everything right here. But at this point we have a higher high. This one fails to form a lower low, because we can see that it could not form a lower low. So at this point, we are set to have SMT divergence. We are set to have SMT divergence because right here, we see something happened. We have a higher high. It took out this high. This one could not take out this low. We could not have a lower low. Just like this one, we have a higher high, and then we also have a lower low right here. Higher high, lower low. This is a higher high, there is no lower low, a failure swing. So this is SMT divergence. There are two things that are here. It is either the institutions or the smart money are reaching out for stop hunts or stop losses above this level and then manipulate price downward, because this one is showing us that price is not willing to go down. The DXY is at this point our bench asset where we can have a direction of the price. So let me go to the chart and then I will show you how to spot this literally. So coming here to my chart, I have Euro USD and the DXY. As I told you, you can use any dollar related asset. Like we have right there, we have the GBP, this is Euro USD. You can use any pair that has USD on that. So this is the 4-hour time frame, and mind you, you can use this across any time frame. The time frame does not matter, and you can use it as the final confirmation before taking a trade. So look at what is happening right here. This is the most recent in the 4-hour time frame. I marked out this level. Can you see? If you take your cursor and bring it right here, I am seeing this is 7th of March 2023, and then this is also 7th of March 2023. We formed this low right here, and this high was also formed, which is a normal correlation. If we formed a low in Euro USD or GBP USD, we should form a high in DXY. The correlation goes like that. And then look at this. We formed a lower low at this point, because you can see this wick has pushed down below this area, so we set to have a low that was formed at that point. But what did we see on our DXY? Look at this. DXY did not form a higher high. There is a failure swing in that regard. We have something like this. This is a low that was formed. This is supposed to form a high, but it did not form a high. Instead, we have a low, which means there is smart money divergence in this kind of incident. So what this means is that this is our asset of trading, and this is our benchmark asset. This is just smart money reaching out for stop losses. When you see this, you should know that smart money are about to reverse price to the next direction. Immediately after this has happened, look at this, they reversed direction. So when you see this, you should know that this is like a fake breakout. You now see where most people don't get it right. If you are trading maybe trend breakout or maybe a breakout trader, this should give you an idea. If you see this kind of breakout, you should know that it's either a smart money technique, that is the SMT divergence, or you can simply go to your DXY and check, did we have the same thing on DXY? Because if you have a low here, you should have a high here. When you see this, you should know that this is a fake breakout. So you can take trades from this kind of area after doing a proper analysis. This cannot be used single-handedly. You can use your proper analysis to know exactly what you're doing. So you can spot this time and time again. Let me go to the lower time frame if we can see this happening literally, so you can know that this can be used on any time frame. If I go to the 15-minute time frame, let me see if I can see smart money divergence on the 15-minute time frame. Did we have this? This is a lower low at this point. This is a higher high, which is a correct correlation. There is no SMT divergence there. Let me see if I can have another one. So I just scroll down and I saw one in the 15-minute. You can see this. Look at this. Can you see a high here? Can you see a low here? Let me show you that literally. If you place your horizontal line here, you can see that this has actually not created any higher high. And this, let's see this on this side. This is the DXY we have at this point. If we take our horizontal line and place it right there, what do we see? We see that this has reached out for stop loss. Okay, we have a lower low. We could not have a higher high here, which means there is SMT divergence in this regard. SMT divergence has been spotted. And what does that mean? It means the smart money are trying to manipulate price, which means they will reverse the movement of the market. This is simply telling you that there is stop hunt here. You can take a shot from here after seeing this kind of thing at the exact time and exact moment. So this is actually how to inculcate this into your trading and how to use it for your final confirmatory entry. Then you can take trades from that. Guys, this is all about the SMT divergence video. My name is Solomon King. If you have not subscribed to my YouTube channel, kindly do that by coming here and subscribe. Let's get this channel to 30,000 subscribers within the shortest period, and then I will keep making more videos for you. Thank you guys for watching. See you next time.